Hi everyone, welcome back to G2's weekly market update, where we break down the top global market stories and what they mean for investors like you. Let's dive straight in. Starting with the United States. The S&P 500 rallied on Friday, ending the week modestly higher after losing ground early in the week. Fed Chair Jerome Powell's remarks at Jackson Hole opened the door to potential rate cuts, lifting sentiment. The energy, real estate, financials, and material sectors posted strong gains, with large cap value outperforming growth. The S&P Mid Cap 400 and Russell 2000 also posted solid returns, while the Nasdaq dipped amid profit taking in AI related tech infrastructure. Treasuries were flat before Powell's speech, then rallied, pushing yields lower. Key data highlights: PMI. Composite PMI rose to 55.4, marking 31 consecutive months above 50. Manufacturing PMI hit a 39-month high of 53.3, while services eased slightly to 55.4. Input costs rose at the fastest pace since August 2022, driven by tariffs. Jobless claims. Initial claims increased to 235,000 versus a forecast of 225,000, signaling some labor market weakness. Continuing claims rose to 1.972 million. Bonds and credit. Treasuries rallied after Powell's speech. Investment grade corporate bonds saw strong demand, while the high yield bonds benefited from risk on sentiment. Europe. European markets gained on hopes of lower US borrowing cost. The Stocks Europe 600 rose 1.40%. Italy's FTSE MIB gained 1.54%. France CAC 40 added 0.58%. Germany's DAX was little changed, and the UK's FTSE 100 reached a record high, climbing 2.0%. Eurozone business activity expanded for the third consecutive month, driven by manufacturing, which grew at its fastest pace in over 3 years. Germany continued to post strong output while France showed signals of stabilizing. Consumer confidence dipped slightly to minus 15.5. In the UK, annual inflation rose to 3.8% in July, driven by food and airfare cost, with services inflation climbing to 5.0%. Business activity surged, with the flash UK PMI composite output index at 53.0 and house prices rose 3.7% year over year. Sweden's Riksbank left rates unchanged at 2% but signaled a possible cut later this year amid weaker economic activity. Japan. Japan's stock markets fell, with the Nikkei 225 down 1.72% and Topix down 0.22% as global risk appetite weakened. The yen slipped to mid JPY 158 against the dollar. Investors focused on inflation data and Bank of Japan policy. Japan's core CPI rose 3.1% year over year in July, above expectations, while exports fell 2.6% year over year due to US tariffs. The 10-year JGB yield rose to 1.61%, near the highest level since 2008, amid speculation that the Bank of Japan could hike rate later this year. China. Chinese markets recorded strong gains. The CSI 300 rose 4.18%, closing at a 10-year high, while the Shanghai Composite advanced 3.49%. The Hang Seng Index added 0.27%. The rally was driven by stabilizing US China trade relations and strong retail investor participation. Margin debt levels climbed to the highest since 2015, signaling robust investor appetite amid low interest rates and limited alternative investment options. G2 takeaway. Global markets rallied on the possibility of US rate cuts, with Europe and China showing strong gains. Japan faced volatility amid inflation and export concerns. Risks persist, but investors are embracing a risk on sentiment for now. That's your G2 weekly market update. If you found this helpful, do not forget to follow us for more insights and tell us which market trend are you watching most closely right now. Thanks for watching. We'll see you next Sunday.